Based on the historical data and forecast, Bitcoin has shown volatility, but the overall trend seems to be slightly downward with a forecast price range between $114,300 and $115,300. The RSI values have fluctuated, dipping below 50 and approaching the oversold level of 20 on several occasions, indicating potential buying opportunities. The Bollinger Bands show that the price has been oscillating within the bands, with recent touches of the lower band. Considering these factors, I recommend a contrarian strategy focused on capitalizing on short-term pullbacks. My recommended strategy is to enter a long position when the RSI falls below 30, indicating an oversold condition. Given the recent RSI of 40.2 on August 22, 2025, and the forecast price, I suggest waiting for a further dip. If the RSI reaches 28 and the price falls to $114,100, enter a long position with a stop loss at $113,800. The initial target price should be $115,500, based on the forecast price range and the middle Bollinger Band. If the price reaches $115,500, consider moving the stop loss to break even to protect profits and potentially extending the target to $116,000 if the momentum continues. This approach combines RSI-based oversold entries with Bollinger Band-based target identification, aiming to capture short-term upward movements while managing risk effectively. Based on the historical data and forecast, Ethereum demonstrates a clear upward trend. The price has been fluctuating within a range, but the forecast for the next 2 weeks indicates a strong bullish momentum, with prices consistently rising towards $5,030. The RSI consistently above 60 indicates that Ethereum is in a strong bullish trend. The Bollinger Bands are widening, suggesting increasing volatility and potential for significant price movements. Therefore, I recommend a long position strategy. The entry price for this long position will be $4,660. Given the strong bullish forecast and widening Bollinger Bands, a stop loss should be placed slightly below the lower Bollinger Band at $3,460 to protect against unexpected downturns. The initial target price will be $4,920, aligning with the forecast high for the week. If the price reaches $4,920, we can consider moving the stop loss to break even to secure profits and potentially ride the trend further. A secondary target price of $5,030 can be set for maximizing potential gains, but it will be contingent on the continuation of the bullish trend. This strategy combines RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and minor upward movement. The RSI values fluctuate between 41.1 and 58.8, indicating occasional oversold and overbought conditions. The Bollinger Bands suggest periods of volatility, with the price frequently touching or crossing the upper and lower bands. Considering the current support at $2.86 and resistance at $3.09, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. My strategy involves a tiered approach. First, initiate a long position when the RSI falls below 40, indicating an oversold condition, with an entry price of $2.88. Set a stop loss at $2.77, the lower Bollinger Band, to limit potential losses. A first target price would be $3.01, aligning with the forecast price for August 23, 2025. If the price reaches this target, consider a partial profit booking. Subsequently, if the price continues to rise, a second target price can be set at $3.09, the resistance level. If the RSI rises above 80, indicating an overbought condition, close the position to avoid potential reversals. This combined strategy leverages both technical indicators to maximize profit while minimizing risk. Based on the historical data and forecast, BNB exhibits a clear uptrend. The price has been consistently making higher highs and higher lows, supported by the Bollinger Bands which are widening, indicating increasing volatility and potential for further upward movement. The RSI has fluctuated between 58 and 71, suggesting periods of both oversold and overbought conditions, but generally trending upwards. Considering this, I propose a long position strategy. The forecast data indicates a continued upward trajectory, with prices expected to reach $926. Therefore, I recommend entering a long position at $877. To manage risk, set a stop loss at $841, just below the recent low. A reasonable target price would be $914, aligning with the forecast high and providing a healthy profit margin. To refine this strategy, we'll incorporate RSI signals. When the RSI dips below 30, indicating an oversold condition, we'll consider entering a long position. Conversely, when the RSI exceeds 75, signaling an overbought condition, we'll consider taking profits or tightening our stop loss. Combining this with the Bollinger Bands, we'll look for opportunities where the price touches the lower band while the RSI is oversold. For this specific scenario, we'll maintain the initial long position at $877, with a stop loss at $841 and a target price of $914. This blended approach leverages multiple indicators for a more robust and adaptive investment strategy, optimizing for high returns while mitigating potential losses. Based on the historical data and forecast, Solana demonstrates a volatile but overall upward trend. The price has consistently tested the support level of $188 and bounced back, indicating strong buying pressure at that level. The forecast for the next week projects a continued increase, with prices reaching $204. Considering the RSI values, which have fluctuated between 48.3 and 66.4, we are currently in a neutral zone. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a pullback or consolidation. Therefore, I recommend a long position with an entry price of $192, a stop loss at $188, and an initial target price of $201. To maximize returns and manage risk, I propose a tiered target strategy. If the price reaches $201, take 50% of the position and move the stop loss to the entry price of $192. If the price continues to rise and reaches $204, take the remaining 50% and set a final target price of $204. This approach allows us to capitalize on the anticipated upward trend while protecting our capital with strategically placed stop-loss orders. The RSI indicates we are not yet in overbought territory, supporting the possibility of further gains. The Bollinger Bands suggest a potential for a short-term correction, but the overall trend remains bullish. Based on the historical data and forecast, Dogecoin shows a mixed trend with periods of volatility. The RSI values fluctuate between 45.3 and 60.7, indicating neither consistently oversold nor overbought conditions. The Bollinger Bands have been widening and narrowing, suggesting periods of increasing and decreasing volatility. The forecast prices for the next week are relatively stable, hovering around $0.235 to $0.243. Given these conditions, I recommend a cautious, trend-following strategy with a focus on short-term gains. My strategy involves entering a long position when the price touches the lower Bollinger Band and the RSI dips below 50. Specifically, enter a long position at $0.232. Set a stop-loss order slightly below the support price at $0.21 to mitigate potential losses. The initial target price will be set at the resistance level of $0.274. If the price reaches this target, consider taking partial profits and moving the stop loss to break even. If the price continues to rise, adjust the target price accordingly. This strategy aims to capitalize on short-term bounces while minimizing risk through careful stop-loss placement. Based on the historical data and forecast, TRON shows a clear upward trend. The price has been consistently moving towards the resistance level of $0.431, despite some minor fluctuations. The RSI, although fluctuating, has generally remained above 60, indicating bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. The forecast for the next week projects a continued upward trajectory, with prices expected to reach $0.388. Therefore, I recommend a long position strategy. The entry price should be $0.362, coinciding with the start of the forecast period and a recent upward push. The stop loss should be set at $0.348, just below the established support level, to protect against potential downside risks. The initial target price should be $0.388, aligning with the forecast high for the week. If the price reaches this target, we should consider moving the stop loss to break even to protect profits and potentially set a new target price near the resistance level of $0.431. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a generally upward trend, albeit with volatility. The RSI fluctuates, spending time both above and below 50, indicating periods of both bullish and bearish momentum. The Bollinger Bands have widened recently, suggesting increased volatility. The forecast for the next week predicts a continued upward trajectory, with prices hovering around $0.93. Considering these factors, I propose a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 40 and the price touches the lower Bollinger Band, indicating an oversold condition. Specifically, let's enter a long position at $0.856. Given the recent volatility, place a stop-loss order at $0.831, just below the support price, to limit potential losses. The initial target price will be $0.923, aligning with the forecast for August 27, 2025. If the price reaches this target, we will reevaluate the market conditions and consider raising the stop-loss to protect profits. If the price continues to climb, we can set a second target at $0.964, based on the forecast for August 29, 2025. This strategy aims to capitalize on short-term dips while benefiting from the overall upward trend, managing risk with strategically placed stop-loss orders. Based on the historical data and forecast, Chainlink demonstrates a clear uptrend, breaking through the resistance level of $29.3 and showing a positive forecast for the next week. The RSI consistently remains above 60, indicating bullish momentum, and the forecast prices predict further increases. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. Initially, we will enter a long position at $26.5, coinciding with the first day of the forecast. A stop-loss will be set at $23.9, just below the established support level, to mitigate potential downside risk. The initial target price will be $28.1, aligning with the forecast for the week. As the price moves favorably, we will dynamically adjust our strategy. If the RSI approaches 80, indicating an overbought condition, we will consider taking partial profits and tightening the stop-loss to protect gains. Conversely, if the price touches the lower Bollinger Band, suggesting an oversold condition, we will consider adding to our position. The ultimate target price will be $28.6, the highest forecast price for the week, reflecting the anticipated peak. This combined approach, incorporating RSI and Bollinger Bands, aims to maximize returns while effectively managing risk in this strong uptrend. Based on the historical data and forecast, Wrapped Beacon ETH shows a clear upward trend, particularly evident in the recent forecast prices reaching $5,410. The RSI consistently fluctuating between 52.8 and 80.3 indicates periods of both oversold and overbought conditions. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for significant price movements. Given the current RSI of 67.4 and the forecast prices, I recommend a long position strategy. We will enter a long position at $5,010, placing a stop-loss at $4,850 to protect against a potential downside reversal. The target price will be $5,350, aiming to capitalize on the anticipated upward trend. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at the lower Bollinger Band. Conversely, if the RSI exceeds 70, suggesting an overbought scenario, we will consider exiting the position or tightening the stop-loss. The portfolio will prioritize the long position strategy with an entry price of $5,010, a stop-loss of $4,850, and a target price of $5,350, adjusting based on RSI and Bollinger Band signals to maximize returns while managing risk. Based on the historical data and forecast, Immutable demonstrates volatility with a recent upward trend. The RSI consistently fluctuates around 50 to 65, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show price movement within a range, with the recent close prices nearing the upper band, suggesting potential for a pullback. Considering the support price of $0.598 and the resistance price of $0.721, I recommend a strategy that capitalizes on potential upward momentum while mitigating risk. My strategy involves a conditional entry based on RSI and Bollinger Bands. We will wait for the RSI to dip below 45, indicating an oversold condition, and the price to touch the lower Bollinger Band. If both conditions are met, we enter a long position at $0.463. The stop loss will be set just below the lower Bollinger Band at $0.45 to protect against a significant downturn. The target price will be the resistance price of $0.721. This strategy combines oversold RSI with Bollinger Band confirmation for higher probability trades, aiming for a substantial return while limiting downside risk. Based on the historical data and forecast, Aave shows a clear upward trend. The price has consistently tested the support level of $331 and is approaching the resistance level of $370. The RSI values, though fluctuating, have generally been above 50, indicating bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter the market at $319, placing a stop-loss order at $300 to limit potential losses. The initial target price will be $346, aiming to capture a significant portion of the anticipated upward movement. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 40, indicating an oversold condition, we will consider adding to our position at the prevailing market price. Conversely, if the RSI reaches 80 or higher, suggesting an overbought condition, we will consider taking partial profits. Furthermore, if the price touches the lower Bollinger Band, it could signal a buying opportunity. We will adjust the target price to $355 if the upward trend persists and the price breaks above $346. This combined approach leverages multiple technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Gala shows a mixed trend with recent price fluctuations. The RSI indicator has been hovering around the 50 level, indicating neutral momentum. The Bollinger Bands have been contracting, suggesting a period of consolidation. Considering the support price of $0.0183 and the resistance price of $0.0203, a breakout above the resistance could signal a strong upward trend. The forecast data suggests a potential upward movement in the coming days, with prices reaching $0.019. Therefore, I recommend a moderately bullish strategy. My strategy involves a long position with an entry price of $0.0179. Given the recent consolidation, I will place a stop-loss order at $0.017, just below the recent low. The initial target price will be $0.019, aligning with the forecast and the resistance level. If the price reaches the target, I will reevaluate the situation and potentially set a new target closer to the resistance. This strategy combines the bullish forecast with risk management, ensuring a favorable risk-reward ratio. The RSI suggests that the asset is not overbought or oversold, so there is room for upward movement. Based on the historical data and forecast, Arbitrum shows a generally upward trend with some volatility. The RSI values fluctuate between 52.2 and 71.6, indicating periods of both oversold and overbought conditions. The forecast prices consistently predict an increase, ranging from $0.548 to $0.606. Considering the support price of $0.473 and the resistance price of $0.73, a strategy focusing on short-term gains within this range is advisable. I recommend a portfolio strategy that combines RSI, Bollinger Bands, and support/resistance levels. The core strategy involves buying Arbitrum when the RSI falls below 20, and selling when it exceeds 80. For the first trading opportunity, when the RSI is 52.2 on August 22, 2025, we can buy at $0.473. Set a stop loss at $0.45, below the bottom of the Bollinger Bands, to protect against potential downside. The initial target price should be $0.53, aligning with the upper Bollinger Band and a reasonable profit margin. As the forecast predicts a price increase, we can adjust the target price to $0.606 if the price breaks through the resistance level of $0.73. This combined strategy aims to capitalize on short-term price movements while managing risk effectively. Based on the historical data and forecast, Pudgy Penguins demonstrates a fluctuating trend with periods of consolidation. The RSI consistently fluctuates around the 50 mark, suggesting neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been trending towards the lower band, indicating potential oversold conditions. The forecast for the next week suggests a slight upward trend, with prices hovering around $0.0347 to $0.0365. Given the current conditions, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 45 and bounces back above 45, targeting the resistance level of $0.0376. The entry price will be $0.0311, with a stop loss set at $0.0305 to limit potential losses. The target price will be $0.0376, aiming to capture a potential upward move. To refine this strategy, we'll incorporate Bollinger Bands analysis. If the price touches the lower Bollinger Band, around $0.0288, and shows signs of rebounding, we can enter a long position at $0.0296. The stop loss will be set at $0.0288, and the target price will be the middle band, $0.0347. Combining these two strategies, the most efficient portfolio will be to wait for the RSI to dip below 45 and bounce back above 45, entering a long position at $0.0311 with a stop loss at $0.0305 and a target price of $0.0376. This approach balances risk and reward, capitalizing on potential upside while protecting against significant downside risk. Based on the historical data and forecast, Ethereum Classic shows a mixed trend with recent upward momentum. The RSI values fluctuating between 44.0 and 64.3 indicate periods of both oversold and overbought conditions. The Bollinger Bands consistently suggest volatility, with the price frequently touching the upper band. Considering the forecast for August 23, 2025, to August 29, 2025, which predicts a price range between $23.5 and $25.2, I recommend a long position strategy. The entry price will be $23.5, with a stop loss set at $21.4, aligning with the established support level. The initial target price is $25, coinciding with the resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll consider a long entry at $20.5, with a stop loss at $18.8 and a target price of $23.5. Conversely, if the RSI exceeds 80, signaling an overbought scenario, we'll avoid a long position. The Bollinger Band strategy will be used to confirm the trend. If the price breaks above the upper Bollinger Band, we'll enter a long position at $24.8, with a stop loss at $23.5 and a target price of $25.2. Combining these signals, the most efficient portfolio will be a long position with an entry price of $23.5, a stop loss at $21.4, and a target price of $25.2, adapting based on RSI and Bollinger Bands confirmations. Based on the historical data and forecast, Ethena shows a fluctuating trend with recent upward momentum. The RSI consistently stays above 50, indicating a bullish sentiment, though approaching overbought territory. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper and lower bands. Considering the support price of $0.629 and the resistance of $0.81, a combined strategy leveraging RSI and Bollinger Bands is recommended. We will initiate a long position when the RSI dips below 60 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, on August 29, 2025, with a forecast price of $0.811, the RSI is predicted to be around 65, and the price is near the center of the Bollinger Bands. Therefore, we will enter a long position at $0.777. A stop-loss order will be placed at $0.677, just below the recent support level and the bottom Bollinger Band. The target price is set at $0.811, aligning with the forecast price and the recent resistance level. This strategy combines the momentum from the RSI and the volatility signals from the Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, Ether.fi has shown volatility within a range of $1.05 to $1.38. The RSI fluctuates between 44.1 and 64.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands consistently show price movement around the center line, with occasional excursions towards the upper and lower bands. Considering the overall trend and technical indicators, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will implement a strategy that combines the strengths of both indicators to maximize profit potential. The strategy involves entering long positions when the RSI dips below 45 and the price touches the lower Bollinger Band, which suggests a potential oversold condition. Given the forecast for August 23, 2025, with a price of $1.22 and the RSI at 44.1, we will enter a long position at $1.22. The stop loss will be set at $1.16, just below the support level, to limit potential losses. The initial target price will be $1.29, aligning with the recent resistance level and the forecast for August 29, 2025. If the price reaches $1.29, we will reevaluate the situation and consider adjusting the target price based on the prevailing market conditions and further RSI readings. This combined strategy aims to capitalize on short-term price fluctuations while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Lido DAO shows an overall upward trend. The RSI consistently stays above 50, indicating bullish momentum, with values nearing overbought territory. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for price movement. Considering the forecast, the price is expected to rise to $1.68. I propose a strategy combining RSI and Bollinger Bands to capitalize on this trend. First, when the price touches the lower band, enter a long position at $1.28. Set a stop-loss slightly below the lower Bollinger Band at $1.18 to protect against unexpected downturns. Aim for a target price of $1.68, aligning with the resistance level and the forecast high. To further refine this strategy, I will implement a dynamic adjustment based on the RSI. If the RSI falls below 30, indicating an oversold condition, enter a long position at $1.28. Place a stop-loss at $1.18. If the RSI exceeds 80, signaling an overbought condition, take partial profits at $1.59 and adjust the stop-loss to $1.5. This combined approach allows us to capture significant gains while managing risk effectively. The final portfolio will allocate 60% to the Bollinger Band strategy and 40% to the RSI-adjusted strategy, maximizing the potential for high returns. Based on the historical data and forecast, Bio Protocol shows a strong upward trend. The RSI consistently remained above 70 for the majority of the period, indicating overbought conditions. However, the forecast prices suggest continued momentum, with a projected increase from $0.184 to $0.273. Given this, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to refine our entry and exit points. The initial entry price will be $0.184, coinciding with the first forecast price. A stop-loss will be placed at $0.171, just below the recent low, to protect against potential reversals. The first target price will be $0.236, aligning with the forecast price and providing a reasonable profit margin. To further optimize the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential buying opportunity. Conversely, if the price reaches the upper band, it suggests a possible exit point. If the price hits $0.251, which is near the upper band, we will take partial profits and adjust the stop loss to break even. The final target price will be $0.273, the last forecast price. This combined approach leverages both momentum and volatility indicators to maximize returns while mitigating risks, resulting in a high probability, high reward investment opportunity.